Let's talk Shopify. Shares down after the company reported fourth quarter earnings. Now, Shopify is a behind-the-scenes e-commerce platform that allows businesses of all sizes to set shop up online. So, Andy, a lot of us don't know that name, Shopify, but if we're online, there's a good chance we're interacting with a business that uses Shopify, and the stock has been a long-term market beater. What do you think of the latest numbers?
Oh, it's been great. And it was a fantastic quarter. It's just that they're going against their own great growth expectations. I mean, that saw a growth in sales of 54%. Their subscription solutions, so their monthly subscription solution sales are up 42%. Their merchant solutions, these are two businesses that Shopify thrives in, merchant solutions, which includes like shipping, Shopify payments, their Shopify capital business, that saw a 63% growth. So overall, the continued growth story at Shopify has been just fabulous, and it continues. However, Mac, compared to last quarter, the growth rates were a little bit slower.
And they're losing money, right? So you say the word fantastic, but then I see the headline about this fourth quarter loss, and I'm like, what gives?
Well, they are losing money, like a whole lot of SaaS business, software as a service business. For a growth company, for an $18 billion growth company. Do I look fantastic then? You don't look fantastic, but I don't think you don't look nearly as fantastic as Shopify does. I mean, this growth story continues. Their expectations for a little bit slower growth might have got some investors a little bit spooked, and that's why the stock's selling down for the first quarter. But this is a company that has always outdid its own expectations, and it did this quarter as well too. So when I think about the long-term opportunity to provide e-commerce solutions to more than 600,000 clients around the world, the Shopify platform continues to get richer and richer. Now, when you look at the stock that's done so well, and it sells at 16 times sales compared to something like Salesforce, which sells at 10 times sales. And this company, Shopify, is reminding me a lot more of like Salesforce. It has a young founder leader in Toby Lukey, who, by the way, said that Shopify was the fastest growing company to 1 billion in sales of all SaaS companies of all time. So it reminds me a lot of Salesforce, and it's a little bit more expensive than Salesforce, but for the growth picture and for the opportunity, I still like Shopify long-term. It's a long-term holding at the Motley Fool. We've done very well with it, and the growth prospects continue to be really impressive, especially how they are continuing to innovate and provide these client solutions for these customers around the globe.
Okay, so I was giving you a hard time, but when I do see the headlines here that they reported a fourth quarter loss, how do I square that with everything you just said? Do I look at that as Shopify is investing, and I'm going to give them kind of a wide berth, just like people gave Amazon over the years when they were losing money? Or is this a loss to be concerned about?
No, it's an accounting loss, and so they're still generating generating cash flow, and they have a load of cash on the balance sheet, more than $1 billion in cash on the balance sheet. So yes, they are making a loss, but they're making these investments for the long term, and this is the way that a lot of these growth companies invest their cash, invest their the money they make from their sales, and the operating profit on an adjusted basis was up a little bit this quarter versus last quarter. So if you account for like some stock-based compensation, they actually are making a little bit of money. But yes, they are investing a lot into the business.
Yeah, I mean, we see this with a lot of the businesses that we cover, right? I mean, and you can kind of tie this back to the initial conversation we were having about a lot of cash there on the sidelines. These are the types of growth companies that have these neat futures that we love to think about. But it is worth remembering. I mean, as you noted, they are not profitable yet, and profits do matter. We look at the fundamentals of the business, the cash they generate, and we can see that 3-5 years down the road. It's also worth remembering that Wall Street, for better or worse, is focused on an earnings per share number. Most of these companies are valued on earnings multiples, and when they're not, it requires a little bit more context, which Andy gave to us. Again, a company that owns a lot of the market it's pursuing, it's just got to really invest a lot up front to build out that presence.
And I'll just say they have a little bit of flexibility on the profit side to dial down or up their investments, just like we saw with Netflix over the years. So right now they continue to invest, and Toby continues to invest back in the business, and we're seeing on the growth side.
And you think about how big that market opportunity is. I mean, you're talking about e-commerce writ large. I mean, the entire world, basically. I mean, that is a massive opportunity. So I like looking at that market opportunity, kind of putting our investments into that context, because it really gives you an idea of how far they potentially could go.